Hi, my name is Tammy, your Max Tax trainer, and I just want to again welcome you to the Max Tax family and congratulate you for taking the steps to becoming a Max Tax agent. Becoming a tax preparer is both a challenging and rewarding journey that you'll never forget. Now, before we get started, I just want to remind everybody that if you are not already signed up for our mailing list, please be sure to go to our website, maxtaxrefundguarantee.com/jobs, so you can receive your instructional material directly to your inbox. Now, let's go ahead and get started. Alright, let's go ahead and go over the topics for this video. In this video, we're going to cover a brief history of U.S. tax history. And when I say brief, I mean very brief. Then we're going to go over the max tax difference, the compensation plan, which I'm sure everybody's interested in, and the IRS.gov website, your reference material. Alright, so a brief history in U.S. tax. Taxes and U.S. history. Taxes and taxation have been important issues in America's past, present, and future. If you recall from your high school social studies class, taxes can be cited as one cause of the American Revolution. You may recall things like the Boston Tea Party, or one columnist shouting, "Taxation without representation is tyranny." Taxes date back as far as 2000 BC, where tax collectors first appeared in ancient tomb paintings. The current tax system in the U.S. has developed over the course of more than 200 years. Over this time period, lawmakers have always strived to achieve three main goals. 1. To raise revenue for things like roads, bridges, schools, police, and other public services. 2. To influence spending habits. Things like if the gas tax was to increase, that would influence you to buy less gas or take alternative transportation or buy more fuel-efficient vehicles. And 3. To be fair to all taxpayers. This is where you'll always hear the politicians shouting who should pay what and how much. Below is a brief overview of the evolution of taxes in the U.S. Constitution. In 1781, the Founding Fathers wrote the Articles of Confederation. The writers of the Articles of Confederation did not support a strong federal government, so they only gave state government the power to tax, and then they turned over the tax revenue to the federal government. Now, as you might recall from your social studies class, the first Constitution didn't go over so well. So in 1781, the writers had to come back to the drawing board and write a new Constitution. In this new Constitution, taxation was considered. In 1788, the U.S. Constitution was ratified, which gave the federal government new and stronger power to tax citizens directly. Taxes in the early days were mostly in the form of excise taxes or tariffs. Tariffs being a tax on foreign imported goods. So, for example, if you buy a foreign vehicle, there is an additional tax on it because that will influence behavior to buy an American good. Excise tax is a tax on the sale or use of a specific product or service. Again, this is used to raise revenue. In these early days, tariffs and taxes provided the federal government ample revenue for many years. However, the one problem with these types of taxes is that they are considered regressive because people with lower income have to pay a higher percentage of their income than people with higher income. For example, the gas tax. If, let's say, for example, you make $100,000 per year and I make $10,000, but let's say we both drive the same vehicle, a 1993 Toyota Camry. All right, for you just like old cars, and that's all I can afford. Now, let's say because we have the same vehicle and get the same gas mileage, let's say we drive the same distance to and from work. So we're paying the exact same amount in taxes. However, as a percentage of your income, you're paying lower because you make more than me. So that's why these are considered regressive, which is one of the third reasons of the goals behind taxes is to be fair to all taxpayers, and some believe that it's not fair. From 1862 to 1872, during the Civil War, the federal government required more revenue than tariffs and excise taxes could provide. So, during that time, the first U.S. income tax was collected to pay for the Civil War debt. It was later abolished. As the economy and population grew, government sought to seek more and more tax revenue. In 1892, income tax was a key issue in the presidential campaign. In 1894, the first peacetime income tax was imposed, requiring people making over $4,000 per year to pay a flat 2% of their income. $4,000 per year at that time represented approximately 10% of the U.S. population. But about a year later, in 1985, the income tax was declared unconstitutional by the Supreme Court because it did not meet certain constitutional requirements. By the early 1900s, the economy continued to grow and government continued to seek more and more tax revenue. So, in 1913, the question of constitutionality was answered. The 16th Amendment was ratified, which gave U.S. government the power to tax any and all income. The Revenue Act of 1942 introduced the broadest and most progressive tax in American history. A progressive tax is a tax that taxes people with higher incomes a larger percent. For example, going back to our example previously, if you make $100,000 per year, you pay a higher percentage than I do if I make 10% per year. The 1942 Act also introduced the tax withholding to create a regular flow of income to the U.S. Treasury. By the end of World War II, about 90% of American workers submitted the income tax form, the 1040 that we have today. And by the roaring 1950s, the tax preparation industry was off to a boom. Now, thanks to the politicians and bureaucrats that only like to make things more difficult, we like to joke in the industry that this is a career field that will always be in demand. And that's where you come in. So what makes the max tax different? Well, like we previously stated, the tax preparation industry has been around for 60 plus years. However, it really hasn't changed much within that time period. And in the 21st century, there's a lot of things that clients need and demand today that the industry has not met. The three things about the max tax difference is the flat fee tax preparation. We go directly to the client, and the maximum tax refund guaranteed or your money back. The flat fee tax prep. Clients want something that is simple and affordable. So when you have your taxes done, if you call any tax preparer office and ask them how much it's going to cost, they'll tell you, I don't know. And the reason why they can't tell you is because they charge you per form. So they really don't know how much it's going to cost until after they prepare your taxes. So the max tax difference, we just offer a simple and affordable flat fee tax preparation service. We come to you. A traditional tax setting is you have to drive across town, wait in some boring tax office, and then sit there to have your taxes done. Well, in today's time, people are busy with work, school, kids, family, and so many other things going on, so they don't have time to take that time out of their busy schedules to drive across town and do that. So instead of the clients coming to us, we go directly to the clients. The max tax refund guarantee. And this is one of our touchstones because many other tax preparers talk the talk, but we walk the walk. We guarantee that our clients will get the maximum tax refund that they're entitled to or their money back. So that is why we take so much time to train all of our tax preparers, because we believe we are the best and we know we are the best. And we also pay for the best. So now to everybody's favorite slide, the compensation plan. We believe that Max Tax is like a family or a team, and every team's motto is mission first, team second, and individual last. And so we recognize each component of the team motto. Individual compensation consists of loyalty or experience based pay and knowledge or skill based pay. Loyalty pay is basically the flat fee that we pay per client. And since it usually takes about 30 minutes to an hour to do a client, we usually just say per hour. So for each year of experience, there's a standard pay scale for that. And as you stay with us, your pay will also increase for loyalty. Knowledge-based pay is that we also recognize you going back to increase your learning and getting the certification in more complex skills. So we pay for those more complex skills. So as you're able to do more and more complex tax returns, we compensate you for doing so. Team compensation. In team compensation, this isn't necessarily something that you see in the paycheck, but it is something that you see in just the overall atmosphere of the family. Morale. These include things that your team leader will coordinate, things such as dinners, parties, events, and other activities. Personal and professional development. Again, one of them would be this free training that you're getting to basically start your tax preparation career. With most other tax preparation companies, you have to pay for your initial training and then any subsequent training. We pay for all of that, so it's no cost to you. Mission compensation. We have a gain share program, which basically means your office will have a goal for that tax season. So if you meet or exceed that goal, you get a percentage of the revenue. And then there's other partnership opportunities for people who are CPAs, EAs, which is an IRS designation, has been with Max Tax for 5 years or more, or you have other similar financial or accounting experience. So just additional ways we recognize people who go above and beyond. The last slide I want to show you real quickly is the IRS website, which is www.irs.gov. This will be a wealth of resource and for you, but I also want to point out a couple of things. I want to point out the forms and publications and then the tax preparer requirements. So let's go ahead and go over to the website. Again, that website is www.irs.gov. If you go to tax professionals, and then on the top left hand side you'll see P10 requirements. This is a mandatory requirement started this year by the IRS for every paid tax preparer to complete this. Now there is a fee that goes directly to the IRS, and that is tax deductible as an independent agent. So you may want to wait until the end of your training until you decide if this is something you want to do. I mean, and this will go with you. It's yours. It goes with you wherever you go. So that is something that every tax preparer is required to do beginning January 1st. Another place I want to point you to is the forms and publications. In each of the following training programs, we may point you to additional IRS resources, and this would be the forms and publication. This is where you can download a PDF version to your computer, you can view it online, or you can order the actual paper form by US mail. What I would recommend everybody to go ahead and order is Publication 17. That's about a 300-page book that we like to call the IRS's Cliff Notes to doing taxes. And it'll basically kind of include everything that you're learning in your training and have a little bit more detail so you can have that on hand. You'll also want to keep that handy while you're preparing taxes. So that is the end of this slideshow presentation. If you have any questions, please enter them below. And again, if you're not already signed up to receive the training material directly to your inbox, please go to maxtaxrefundguarantee.com/jobs. Again, I want to welcome you to the MaxTax family, and we'll see you on the next video.